Hi guys, Harry Otis here, professional trader for 20 years. Started my career in 2005, still alive in 2026. So today is May the 15th, this candle right here, Friday, end of OPEX. It's OPEX week, not that we noticed, but Friday, big down day after a very solid week. We gave up a little bit, half and maybe more than half of the gains for the week. It is the 15th of May. It's OPEX, of course. Pretty uneventful for an OPEX. So something we need to look out for, and today's big news is the inflation time bomb. Okay, that is the reason why the market went down today. It's an inflation time bomb. Okay, we'll get to that and the implications going forward. However, I just want to make it noted that today is the first day that the market is down over 1% since March 30th. Since the nadir right at the bottom of this panic move in oil. So yeah, not even this day here was 1%. This was 0.65%. Today was the first minus 1% day in the SPY. Okay, and it is because of inflation fears creeping up. The China-U.S. meeting had absolutely no benefit, I guess. People are seeing through this, and they're really worried about inflation. And the reason it's a time bomb is, we'll get to that first. Let's talk about the technicals. It's still bullish. Despite today's drop, we are still higher than we were forever almost, except yesterday. So yes, it's still bullish. Nothing has been violated. Like, we can bring in the moving averages. We're well above every moving average. From this is the short term. These two short term, the 10, the 20, and the 50 and the 200 are still upward sloping. So don't let this fool you. We are still in an uptrend. Okay, and I am looking to buy this move. Okay, technically speaking, we can cover this gap here. This would be a bullish move down to, let's say, this is 722 on the SPY. Very possible. We could easily cover it in the weeks ahead. Maybe go into this minor chop zone and outside move down to the breakout point, which would be crazy if that happened. Okay, it's not out of the question. Remember, a lot of call buying was happening here. We have to wipe them out. Maybe this UpX did it, but we'll have to see going forward. Okay, it's really healthy for the market to come down here. Okay, so technically we're bullish. We always pair it with a sentiment, and the sentiment here is back. It was 66. Now we're back down to 63. We're still greed. We can fall down to neutral, maybe even fear. Okay, because the momentum is still at extreme greed. We saw nothing has been changed. Okay, the strength and the breadth. The breadth we mentioned is in fear. Okay, we mentioned that it's very, very low, and if it drops a little bit more lower, we could get an actual buy signal. So this is what we were waiting for, and we need to burn off this extreme greed in the put call ratios. Too many calls were bought. I don't know how long it's going to take before this happens, maybe a couple of days, because as we mentioned, there's a lot of bears still in the game. Despite this move higher, they switch quickly when the market moves down. Okay, let's see if this happens this time. If the market goes down, next week I want to see what the AAII Investor Sentiment Survey says. Are the bears back? If they are, then I'm still bullish. So, and you should be too. Okay, so yet again, the sentiment is negative. The sentiment dropped a bit, still in the greed. Okay, we never touched extreme greed, and this is a healthy correction after this move. Okay, so let's move to the big news of the day. It's the inflation time bomb. Okay, we mentioned a while back that basically Trump with this Iran war is on a clock. Okay, tick-tock, because as long as this war continues, we're going to have oil and everything going up. Okay, we saw, and even producer prices. We saw the producer price index. Remember a couple of days ago? It's this is the United States PPI, and it's at 1%. Okay, it's at 1%. So, and this was the core. So, was it the core? Let's see here. PPI, core PPI. Yes, it's at 1%. And it was at 0.2%. So even the core X energy is going up. So this was the warning sign that inflation is creeping into the economy, and we can't use the excuse that it's just energy related. Okay, and that's why at this point you're on the clock, Mr. Trump. Okay, you better get this war down, in my opinion, or the inflation time bomb will continue. You can see it in oil. Okay, oil market started down this morning. Like, if you look at the 15, this is a chart of oil. If you look at the chart, the 15-minute chart, you can see of oil, it was gapped down. It opened up like in the 6 o'clock session last night. It opened up down down like $5, and the whole time it was bid after that. All the London time, everybody was started buying oil. So it's telling you that and it finished at highs. Okay, basically barely moved. Okay, so let's go back to the daily. Oil here is telling you that it's not over. The game is not over. It's going to stay around the $100 barrel. But even if it stays at $100, that's going to still seep inflation into the economy. Okay, it's not good. Okay, and the reason for that, if you look at the Fed Watch tool, which we did last time, this is the Fed Watch tool. Okay, I'm looking at December 2026. So this is for all of 2026. Okay, the last meeting, let's say, and there's literally a 38% chance, this column right here, that we hike once in 2026. Okay, it used to be nothing. It used to be 5. Last time we looked at it was 30, and we said it gets worrisome. Okay, 30% gets worrisome, but this thing was still at like 60+%. As long as it stays above 50%, this thing, meaning no hike, is at 50%, 51%. As long as it stay above that and higher than this hike column, we're okay. But now the market is starting to tell you, Trump, we're not going to buy it anymore. Okay, the rate hike odds are increasing, and if the Fed, and usually when the Fed gets into a rate hiking cycle, it doesn't stop. It continues for a while. Okay, so this inflation cannot be solidified in this market. Which is basically oil driven, because then you will see the SPY continue to drop. Okay, so you had US oil still around the 100, showing relief yesterday night. We showed it at 6 p.m. It went down because of the China-US meeting. Something good, people thought something good would happen. Trump would ease the pressure on Iran. They agreed to that. China says they should open up the Strait of Hormuz. So the market was down overnight, but nope, they bought it back. Okay, so they're starting to, the market action is telling you that they are starting to not believe the jawboning anymore from Trump, and they want Trump to do something concrete regarding the Strait of Hormuz and Iran. Okay, because once you have oil like that, gold was holding until it gets destroyed today. Past couple of days destroyed. Why is gold down? Okay, well, because with rate hikes means that the real rate of the return in dollar and everywhere is up, and that means 0% return assets like gold will go down. Gold needs negative real rates to really fly. So gold is down. Like we said, gold, we don't expect to see much for gold for the next 2 months, the next summer months. Okay, so it might chop around here and go lower. And silver looked very, very good, but in 2 days, what is that down? 16% in 2 days. We went from like 89 to 75. So this destroyed it. So again, same story with silver. If interest rates go up, silver is going to get hit, gold is going to get hit. Okay, and it's all dependent. The precious metals are telling you that now it's time to worry about inflation. Okay, you got away with it for a long time. Okay, so all because of the war and oil. Okay, so let's go visit the past winners, the semiconductors. Right, semiconductors are down just like the market, but it's still bullish. Okay, it basically alleviated overbought conditions. Okay, looking to, it might not even, it's almost the same carbon copy as the SPY, okay, except with higher magnitude. It might cover the gap. It would be nice if it covered the gap here at like 522 on the SMH. That would be nice. But so far, this is still bullish. It's consolidating at the highs, still bullish. Nothing has been violated in the semiconductors, okay? So, let's look at Intel. Look at a couple of our trades right now. Intel is a semiconductor. We have this inverted triangle going on. Yeah, it came down. It's alleviating the pressure of this inverted triangle. And again, same as the SMH, the RSI now is back to, not overbought, but you have a sell signal on the MACD. We have a crossover. So we don't know how that plays out. This could continue, or it could just hover around these levels before going up. We just don't know yet. Okay. But I suspect that all these semiconductors, and which lead the market, and SPY might have to bleed off more to get rid of the calls. Okay, a lot of calls were bought. We have to destroy them. Okay, because you don't make money by being at the extremes. Okay, being with the crowd is nice on an uptrend, and you should be. But when it gets to extremes, it should be a pullback. Get rid of these Johnny-come-latelys. Start forming some kind of base, a higher low retest, some kind of technical signal, and then you need a sign to go back long. I'm hoping for this. This whole rally up, I'm hoping for some kind of pullback that is buyable. This is not a buyable pullback. This is 1 day of minus 1.2%. If something happens over the weekend or whatever and Trump makes peace, this is going to highs. Okay, we're gonna have some kind of exhaustive move higher. Okay, we could get to the 770, which is the 10% move from the breakout, which we had as an outside target. We had a 5 to 10% outside target on the SPY. Okay, so Intel, I don't know how much lower it goes. I have to see. This helps our short. Okay, but as you know, I am more long than I am short. I'm net long, so that doesn't help the overall portfolio today. But this was nice. Okay, we also talked about the SaaS stocks. Okay, SaaS stocks look like they were bottoming and coming back. We have ServiceNow. Remember, we entered this trade. We did a 85. Let's mark it again. We sold the put at 85 and bought back the 80 put. This credit spread, we did it for about a 170, as I recall, credit. Okay, so because we entered these stocks, we mentioned, because look, they're down massively on the year, okay, because of the AI trend, but we were starting to see some negative divergence on the charts. The price was going down and the technicals were going up, so I'm expecting some kind of bounce, and as it goes higher, I will get rid of this put spread because I am not bullish the sector yet. Okay, we could get some oversold bounce is what I'm hoping for. Okay, same thing with Shopify. We sold the 90 put here. It's getting a sort of a bounce because it's right at the technical level after dropping again from like 180 to like 100. So that's a huge drop in these SaaS related stocks. Again, they look, negative divergence, price going down, RSI going up. Look, from this point on, you see the RSI up. It's all the same story there. It's getting exhausted. You just don't know when the low will happen, the bounce will happen. I suspect Shop goes up to the 110 level, which is this breakout zone, and maybe as high as 129, 135. Okay, at that point, I'll be looking to sell because I don't think it's going to go higher, but we'll see. You don't know. This is what I'm thinking now, but it could change going forward. So you have this for Shopify, ServiceNow. I think the SaaS stocks are going to sort of, money's coming out of the high flyers sort of and getting into these guys because these guys are very, very overdone. Okay, I don't know how it plays out, but let's see how it goes going forward. So that's it, guys. Let's recap. SPY, inflation time bomb. Okay, we see here from the Fed watch that the rate hike odds are increasing. That's not good. If this rate hike goes above 50 and stays there for a while, Trump is in trouble. He has to alleviate this inflation bomb brought about by high oil. Oil is sticking at that 100 level, doesn't want to come down. It's consolidating right here. Seems like 100 is a sticking point, but it doesn't have to go higher. 100 for a long time will make things expensive. Okay, it'll tank his midterms. Okay, so if Trump is a political animal, and we know he is, you just don't know what he's going to do. He's very erratic, but a logical person would try to end this war. Okay, so that's it, guys. Let's see what happens. I suspect next week we start drifting a little bit lower. I would like that. I'm telling you, as a bull, you want this market to go down and to get into extreme territory in the oscillators, in the midterm oscillators, or like at least close to extreme before going long. This is a positive thing if you're a bull. All right, later, guys.